we have. So today let's look at AUD CAD, Australian dollar and Canadian dollar. Does anyone has any favorite pair that you want us to use for this top-down analysis?
Euro USD.
You suggest Euro USD, right?
Yeah.
Okay. Any other pair? Can anyone give any other pair? What? I'm not hearing.
350 index.
50 index.
Step index.
Step rather.
Yes, step 100, yes.
Step 100. Okay, good. So let's quickly see what the time will allow us to do. So let's go quickly to Euro USD. So Uche now already told us how to get the pair from TradingView. So when you go to your TradingView and Euro USD is already on your watch list, you can select it from there. So I'm approaching this analysis, or as all of us have at least some kind of knowledge about trading already. Okay. So not just as like typical beginners will do. And the recording will be available so that any of us can watch it later to learn. So for the top-down analysis, I will first look at the weekly time frame. So let's see the weekly time frame, what we are doing. So this is the weekly time frame. The weekly time frame here might look similar to what the monthly time frame will give us. So the weekly time frame should be perfectly fine. So from this weekly time frame perspective, are we bullish or bearish? That's the first question we have to ask ourselves. What is the trend on this market? So as we can see from the chart, the free version of
Bearish.
the free version of TradingView, we have information or history or data from the top here coming all the way down to this area. But though whatever is from the top here to the down here is important for us as technical analysts, we are looking to take a trade in the short term, as in the current week. So all this information up here might not be really too relevant for us. So we have to focus on the current swing structure. Okay. The current swing structure, the most current information that we can use. So though information from the past year is important, we can only use what is available in the short term around here to set up our trades. Good. With that said, the first thing to do from this weekly time frame or monthly is to know what is the trend. So from just up here, the trend is bearish for me from up here. Why am I saying bearish? From our previous class, we've used market structure to help us identify what a bearish or bullish or ranging market is. So a bearish market is a market where we are having lows, lower high, lower low, lower high. So it's sloping down. We get a low, we get a lower high. If we were to get something like a high that is more than this previous higher point here, then that means we are invalidating this trend that is going down. So if you know how to use a trend line, you can take your trend line from up here. Trend line should have about 2-3 touches and you should be good to go. So I can draw my trend line like this, and right from the information below the trend line here, we can see we are down, bearish. And what also helps us to know that the trend line helps us to be bearish is we are going lower low, low, lower high, lower low, lower high, lower low, lower high. We have a more lower low, and then we have a lower high, and then we have a lower low, a low, we have a lower high, and we have a lower low. And from this lower low, last low here, we have not seen any price action giving us a lower low again. So this is the last low point. So what also can we use to say that we are bearish? Because as price is trading lower low, we are seeing break of previous lows. Break of structure is happening. Okay, so here we broke structure. Here to relative equal lows. But here we break this low here into this area and we break structure to the downside. So we are breaking or shifting structure to the downside with previous lows being taken out all the time. Okay, so that is a sign, or that is what is telling us that this market is bearish from the whole bigger picture. This market is what? Bearish. So now here we can see that we traded above the trend line here, and trend lines act as diagonal resistances and supports. So we traded above the trend line here, and but we still ended up coming below the trend line to give us a low. Now currently we are above the trend line. Okay, so being above the trend line doesn't mean that we are bullish. We have to really have all the conditions to shift to a bullish market met before we can say we are going bullish. So the question we have to ask ourselves from this weekly time frame is that what is the last high that broke structure? So that is where we are going to frame our current analysis from. The last high that broke structure. So for me, I can say that this area here, what is break of structure? Taking out a previous low, took out this previous low here. This high area here, price dropped down and took out this previous low on the left side here. Okay, including even these lows here. Okay, so price took that out. After price took that out, we have not seen price action coming into that area again. So the only condition or the only way that we can see ourselves going bullish is when this area is taken out. The moment this area is taken out, it means we are changing character. Okay, we are changing character. So let's see what is happening right now. Now we have the last swing high that broke structure. So this point, this area here is our first swing point that we will have. And this low below here is our low point, our swing low. Swing high, swing low, because we broke structure here. Okay, so what is happening when we are in a bearish market? Now, this move that is going up here is giving us what we call corrective movement. So though we are bullish, okay, why are we bullish? We are bullish because from this corrective move, because this is the last high here. The last high, Okay, that broke this low and gave us this last low point here. When market moved up and took that high out, we call it a shift or a change of character. Okay, a change of character. So from this point, we shifted or we changed character to a bullish move. Why did we change character? We are pulling back into this area. We want to trade into this area. We broke structure to the downside here, and we are shifting, having a corrective pullback. Okay, so that it's likely we can continue the downtrend and get a new low because this market is generally bearish. Okay, so that is what this move is doing. So until this high here is broken, the idea is that around somewhere here, we should have price sell so that we will have a new low. And then the bearish trend will continue just as it has been from the top coming down. Okay, just as it's been from the top coming down. We can also draw another trend line connecting the new highs. Okay, we can draw another trend line even from the top here to also this high here. So if it keeps breaking, we'll keep drawing the trend line to them until this high point here is broken, fully broken. Once we fully break it, then what do we expect? We'll expect a pullback into this area. Then after the pullback, what do we expect? A new high. This is going to tell us that we are more bearish. We have changed from, sorry, we are bullish. We've changed from a bearish market to a bullish market. Okay, if this is to happen, if we take this high out, then market will pull down and push up, giving us a new high. And that means that we are now bullish. We are not bearish anymore. We are bullish. Okay, we are bullish. So how we just have 10 minutes. My God. So how do we filter ourselves into this trade? And what is the bias? Are we going to break this high, or at a point here, somewhere here, we are going to gravitate towards the downside to continue the downward movement? These are the two questions that we have to ask ourselves. Now, if you are understanding me from the context that I'm creating, then let's move on. So now we have a shift of structure here, and we understand we are bearish, and this is our swing, our most current swing high, and this is our swing low. But we've shifted structure, and this move to the upside to us is like a corrective move that we are doing. So now that we have our swing structure or high and low, we have to use the Fibonacci to measure from the high to the low and see where has price traded to. So as we can see, first, price traded up into equilibrium, 50%. That is my, is it green or blue line? Yeah, 50%. And had a consolidation around that 50.38, 50.38, but it pulled back to 23 here. Then price has been bullish, sweeping the 50% area, using it as liquidity, sweeping it into 61, drop to retest 50, break up into 78, dropped a little bit, and is trying to break up. Okay, so where are we right now with this current range? We are inside premium. Uchena, where are we? We are inside premium. Okay, we are in premium. So in premium, what do we look for? We look for sells. In discount, below the 50%, we look for buys. Now, when we saw the shift of structure inside this range, when price was below here or in discount, we always have to look for buys. But the moment price goes above the equilibrium and gets into the premium, what do we start looking for? Sells. So we have to start now looking for reasons to sell in the reasons to sell in the premium zone. So what is going to be our reason to start selling? Below here, we saw a shift of market structure, and that became our reason to start going bullish. Around here too, we should look for shift of structure from this bullish corrective move to a bearish market. Once we can see that, then we will start looking for a reason to sell. Okay, so one, we are inside premium zone. So what are we going to look for? We have to look for a move to the upside, a move that goes to the upside, and another move that comes down to take the low of the move that went outside. Then maybe we have to see a move that takes out the high again if we are hunting liquidity. And we have to see a move that drops to impulsively take the low. Then on the retest, we can now go for a sell. This will show us that market has shifted to a bearish direction. We have two break of structures. If this is to happen around the top here, something like this is to happen around the top here, then we know that the premium zone is going to hold. And therefore, if we take a sell from that area, where are we targeting? We target sweeping all internal liquidities, including this, and target external low, this low. Our aim is to make a new low so that market will continue the bearish movement. That will be our aim. Okay, all should happen around this area. Now, let's go into the daily time frame to see if something like that is happening around the 70, around this 70. Okay, so this is 4-hour time frame. 4-hour can be good for us. So now we are at 76.8%. Are we seeing something like that? Let's see. So here, our highest point is here. So the last low point pullback ended here. Okay, so from this low here, we broke structure here. From this low point here, we broke structure to the upside and got this high here. Now, we got a pullback into this zone. And from the pullback, we failed to make a new high. Okay. Now, after failing to make a new high, see, this did not take the high out. We are expected in a bullish market to be breaking structure and making new highs. But this time, when price pulled back, we did not get a new high. Okay. But instead, price dropped to break the last low here. Price dropped to break it. It also broke the main low or the source that even broke structure from this side to give us that high. It broke it. See, this move took this low and took this low. This is the market giving us an intent. Okay, we are having an intent at the premium zone. This is an intention that the market is giving us. So one, if the market is able to stop somewhere here, and we see a new shift of structure, let's say on 1 hour or 2 hours, like this is the last low that I can see here. If we see that the market drops down to take out this low, then, and the market reverses and fails to give us a new high, as we see an engulfing candlestick here, because we've already had the intention below here at this side, the market broke structure and also broke this area structure. So if we see a new structural shift around here, showing us that we want to go bearish, if we break a new structure here, an engulfing candle from here is going to be our sell signal. And we will look to go bearish from this area. If we go bearish, where is our first TP? Our TP1 is where this ended already, because at this place, this area is going to now be like a strong support area where price stopped here, moved up, stopped here, moved up. So our first TP is going to be around this place. Price will move up, but if we succeed in breaking this area in the future, then it means we are having low, 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 3 lows. We are having a low here, another break of structure here, and we are having another low here. This is a sign of a bearish market, and therefore it means this premium zone has held. So we now have confirmation to trade and target the lowest points on this chart, going bearish until a shift of structure or market shows us this intention around this area. We cannot say we are going bearish yet, because price can still trade into the 100% above. We are now on 76.8. So if this new week, the new candle has opened, I think market is already open. You see, there is a gap already. If the market takes out this area, trace above this area, then it means we have new highs. If it keeps going up and takes out